investors have increasingly bought the US dollar as inflation in the United States has reportedly soared to 3.7%, standing above the 2% annual target. Against this backdrop, the Federal Reserve will likely increase its interest rate, and markets will continue buying US currency. Looking ahead to the first half of this week's trading, we will continue to discuss which publications will influence investor sentiment. You are watching Traders Calendar on the InstaForex TV channel. Markets expect a calm Monday as there will be no major news on this day. However, investors are bracing for macroeconomic data that will be released on a Tuesday at the opening of the Asia-Pacific trading session. They will scrutinize the minutes of the Reserve Bank of Australia's meeting. During this meeting, the Australian regulator left the interest rate unchanged at 4.1%. However, this was the first meeting under the leadership of Michelle Bullock, who began a new role as the Reserve Bank of Australia governor. That may be why a pause was decided to happen. Meanwhile, the central bank may continue to tighten its monetary policy as inflation remains elevated. This could bring back demand for the Australian dollar. During the European session, traders will assess the prospects for interest rate changes from the Bank of England. On Tuesday, labour market data will be released in the UK. It's expected to show a spike in the number of people claiming unemployment benefits. The UK labour market should cool down as the Bank of England tightened its monetary policy. Investors will be looking for confirmation of this by selling the British pound on Tuesday 17. On Tuesday, investors will also pay attention to the economic environment in Germany. Last week, the International Monetary Fund downgraded its outlook for the German economy, predicting a recession. Investors confirm the probability of such an outcome, taking into account the values of the ZEF Economic Sentiment Index. The index is likely to remain in a negative territory for the 6 months in a row. Against this backdrop, the euro may weaken against the US dollar. Meanwhile, the US dollar bears will also find a reason to trade on Tuesday. In Canada, inflation data will be published, and the consumer price growth is accelerating again after reaching a 2-year low on June. Since then, inflation has been accelerating, forcing the Bank of Canada to resume rate hikes. By the way, the Canadian economy is quite resilient and can withstand another round of monetary tightening. The US economy has also proved to be resilient. However, analysts have increasingly been predicting a worsening of the economic situation. While the actual data in the report suddenly turned out to be better than the forecasts, for example, this has been the case with the employment data. On a Tuesday, consumer activity is expected to weaken and post a slowdown in retail sales. This indicator gives an outlook for the US economy as spending accounts for more than 2/3 of the US GDP. If retail sales growth is decelerating, the economic growth should also slow down. On Wednesday, markets will be expecting a batch of economic data from China. Given the persistently decreasing exports, the authorities and investors will likely turn their attention to retail sales. The Chinese government has been reiterating that it wanted to rebalance the economy to make it less dependent on external factors. So far, the macroeconomic data shows that consumption is growing faster than production. As a result, retail sales are expected to grow by 4.7%. In China, industrial production growth is projected to slump to 4.3%. The global economy is trying to recover after restrictive measures were lifted. China's industry is having a harder time than the rest of the world's economies. China's industrial production cooled down quickly. However, it's harder for it to recover quickly, considering that foreign demand remains sluggish. All of these factors hurt GDP growth. Despite Beijing's report measures, the country's GDP is expected to decelerate to 4.4% in the third quarter. Notably, the Chinese authorities have set a GDP growth target of around 5% this year, after 3% growth in 2022. The forecasted figure is below their target, and the market will likely see a drop in risk appetite after the news, which means that the Australian dollar, as a barometer of risk sentiment, is likely to plummet. Notably, Australia is a main commodity supplier to the Chinese industry. Another important event is the UK inflation data. Consumer price growth has slowed down, but compared to the US inflation at 3.7%, or the Eurozone, the region almost slipped into recession, where inflation stands at 4.3%. In this context, the 6.5% rise in CPI over the year looks extremely high. However, the Bank of England, following the European Central Bank, is unlikely to refrain from interest rate hikes and will keep its key rate unchanged. Against this news, the British pound is expected to continue falling. We will monitor the market reaction to the above-mentioned reports. Subscribe to our channel and follow changes in market sentiment with us. Any comments, questions and offers are welcomed. We wish you profitable trading and see you soon.